See, it's up to you.
Are you ready, Ruth?
Ready. Good morning. Welcome. We're excited to be here for Paid Leave Oregon presentation. I'm Ruth Swain, the director of the Small Business Development Center at Rogue Community College. Very excited that our chamber is hosting this. I'd like to introduce Josie Malloy, our president and CEO of the Grants Pass and Josephine County Chamber. Josie, did you want to say a few words?
Yeah, thanks everyone for joining us, and thank you SBDC for also bringing this webinar. We're excited to partner with them on this. We know these topics are very important to small business owners, and we enjoy hosting them. So thank you all for joining us, and just so you know, we are recording it, so it will be sent to you in an email. And thank you again.
All right, just a little bit of housekeeping here. Our guests will make a presentation, and we will have time after the presentation for your questions and a little Q&A time. You're welcome to put them in the chat, and we will be addressing those after the presentation is made. I'm very excited to welcome Laura Ayala and Philip Hudspeth. They are with the Oregon Employment Department, and Laura is going to make a presentation. And thank you, Philip, for being the caretaker and moving the presentation forward. So I'm going to go ahead and let you take it away, Laura.
Perfect. Thank you so much, Ruth. Thank you for inviting us today. I'm Laura Ayala. I use she, her, ella pronouns, and I'm a program analyst for the Paid Leave Oregon program. And with me today is Philip Hudspeth. Philip, if you want to introduce yourself, that's fine.
Good morning, everyone. Thank you, Josie. Thank you, Ruth, for inviting us. This seems to be a very timely subject with the SBDCs. I just gave a presentation to the Klettstop Community College SBDC on Monday. So thank you so much for allowing us to join you.
Awesome. Thank you, Philip. So today we will spend the first few minutes providing an overview of our program with the topics. And I don't know, Philip, can you move the slide? Sorry. Yeah, with the included the specific topics covered on this slide. After we conclude our overview of the program, we will begin to take questions either in chat or we can do it verbally. Again, please save your questions until after the presentation is over. We will drop a link in the chat to the Paid Leave Oregon Employee Guidebook. We will be referencing the guidebook through this presentation. The guidebook is to give employees and their families a general overview of their rights and responsibilities under the Paid Leave Oregon program. Businesses, workers, and other advocate groups have been talking about bringing paid leave to Oregon since 2016. A paid leave was passed by the Oregon legislature in 2019 under the House Bill 2005. The bill received support from various unions, organizations, and other advocacy committees who is made up of members representing businesses, workers, and community voices. Oregon joins 11 other states with a paid leave program, and 5 additional states are discussing legislation for a paid leave program. So contributions started on January 1st of this year, and benefits will begin September 3rd of this year, 2023. Paid Leave Oregon covers nearly all employers in Oregon, including nonprofits as corporations and religious organizations. All employees except employees of the federal and tribal governments are required to participate in the paid leave program. In Oregon, paid leave is for up to 12 weeks with 2 additional weeks for some pregnancy-related conditions. Leave can be taken in 3 broad categories: family leave to care for a family member with a serious illness or injury, or to bond with a new child after birth, adoption, or foster care placement. Medical leave to care for yourself during a serious health condition, and safe leave is for individuals who may have experienced sexual assault, domestic violence, harassment, or stalking. You are covered if you are employed and your work is located in Oregon. You've earned at least $1,000 in wages in the year prior to your qualifying event. You contribute to the paid leave. You contribute through paid leave through your payroll deductions. You experience a qualifying event and you have a social security number or an individual tax identification number. Employees who are eligible to receive unemployment insurance or workers' compensation are not eligible for paid leave. So some examples of qualifying events are disability due to miscarriage or stillbirth. This includes both physical and mental impacts related to the loss of pregnancy, caring for and bonding with a child in the first year after birth, after adoption, or after they are placed in your home through foster care. To care for a family member with a serious health condition. Some examples of non-qualifying events are non-serious illnesses, bereavement, and military leave. Pay Leave Oregon does not replace OFLA or FEMLA, and there are important differences between the three programs. One major difference is that Pay Leave is a paid benefit and OFLA and FEMLA are unpaid. You should take leave under OFLA or FEMLA at the same time as paid leave if it is for the same qualifying event. Paid leave allows claimants to top off paid leave benefits with other leaves such as short-term disability, vacation, or sick leave. We encourage claimants to talk to their employer and insurance provider about topping off benefits. Keep in mind you will need to provide documentation to support the leave for which you have applied. For safe leave to care for and bond with a child, verification sources include birth certificate, hospital admission form, or a statement from the foster care or adoption agency. Family to care for a family member with a serious health condition, and for your own medical leave, you can use any of the following forms of verification. The Paid Leave Oregon Verification of Serious Health Condition Form, Oregon and Federal Family and Medical Leave Healthcare Provider Certification, other documentation from a healthcare provider, and please refer to the Employee Guidebook for more information. For safe leave, you will need to show a verification using either the Pay Leave Oregon Safe Leave Verification Form, which requires checking a box, or any other source such as a copy of a protective order, a healthcare provider document, a member of the clergy document, a Title IX coordinator document, or documentation from an attorney or a police report. For more information for verifying sources, please see the Employee Guidebook. Every covered employee in Oregon can take up to 12 weeks of paid leave in 1 year period or benefit year. For all types of leave, you can take your leave for a week, a day, or a number of days less than a week. You cannot take leave in amounts less than a day. You can also choose between two different options for your leave schedule: consecutive leave or intermittent leave. You cannot work during days that you are on leave. If you have more than one employer, you must take leave from all your employers on that days you are claiming paid leave. Benefit years are a rolling 52-week period commencing the Sunday before your leave begins. If you have multiple qualifying events in a single year, you must file separate applications for leave. If you have a chronic medical condition, then you will need to file a new application every benefit year. When you're ready to apply for paid leave, you will need to make sure you have your documentation ready. If you know that you will need to take time off for a covered life event, you must inform your employer at least 30 days prior to starting your leave. For unforeseeable leave, you or your authorized representative must provide verbal notice within 24 hours and written notice within 3 days. Your employer may ask you to tell them what type of leave you are taking, like family leave, medical, or safe leave, why you need to take leave, your covered life event, and when and for how long you expect to take leave. If you don't know exactly when or how much leave you will take, you can give your employer an estimate. You can apply in several ways. Francis Online is the quickest way to submit an application. To use Francis Online, you'll need to create an account and can do that as early as August 14th. Paper forms will be available on PayLeave's website. You can also call the toll-free number between 8 and 5, and that number is 833-854-0166, Monday through Friday, and PayLeave staff can help you with your application. So once your application and supporting documentations have been received, your application will be reviewed. You'll receive a potential benefit amount letter with your weekly benefit amount. Once PayLeave has made a decision, you will receive decision letters that show either an approval or denial of your application. You will also receive information on how to request a hearing to appeal a decision. PayLeave will also notify your employer at the time we receive your application, and once more when a decision has been made. We will make a reasonable effort to issue the first payment within 2 weeks of approving your claim consistent with your leave schedule. PayLeave will not share health information related to family, medical, or safe leave with your employer. Contributions are a percentage of wages paid by employees and employers. The Employment Department sets the contribution rate annually by November 15th, and the rate cannot exceed 1% of gross employee wages. The rate for 2023 is 1% of up to $132,900 in wages. Earnings over that amount are not subject to further contributions. Employees pay 60% of the contribution rate, and large employers pay 40% of the contribution rate. Small employers with fewer than 25 employees are not required to pay the employer portion of contributions. Employers may choose to pay the employee portion as a benefit for their employees. There are different rules for large and small employers. Paid Leave Oregon defines large employers as those with 25 or more employees. Employer size is determined by payroll reports submitted by the employer. Employee count will be determined yearly. The employee count includes full-time, part-time, and seasonal and temporary employees, as well as out-of-state workers. Employers determine their size by counting the number of employees, including both those inside and outside of Oregon. Only workers hired to replace employees taking leave are excluded from the count. Small employers that agree to pay the employer portion of contributions for 2 years may be eligible for assistance grants to help with the cost of hiring a replacement worker or other significant wage-related cost when an employee takes paid leave. The grants available are a $3,000 grant to hire a replacement worker or a $1,000 grant for wage-related costs such as overtime or training costs, up to 10 grants per year, one per employee. When we calculate benefits, we'll look at how much the employee earned compared to the state average weekly wage, which is $1,269.69 through June of next year. People earning 65% or less than the state average weekly wage, which is about $825, will receive 100% wage replacement. For people earning more than the $825, benefits will be calculated in the following way. 65% of the state average weekly wage, or $825, and 50% of your average weekly wages that exceed that amount. The minimum weekly benefit amount is $63.48, and the maximum weekly benefit amount is $1,523.63. Benefit payments will be issued weekly for days of leave taken during the prior week. A paid leave pays benefit either by direct deposit or by prepaid debit card. To receive your first payment, you need to select your preferred payment method during your initial benefit application. If you do not select a preferred payment method, you will be sent a prepaid debit card. Consecutive leave does not require weekly claims. Intermittent leaves will require weekly claims, and claims can be filed over the phone on Francis Online, or you can download your weekly claim form and mail it in. Paid leave benefits are taxable. You may need to pay federal and state personal income taxes on your benefits if you opt out of withholdings. To reduce the amount of taxes you need to pay at the end of the year, you can authorize paid leave to withhold state or federal taxes from your benefit payments. And you can make this tax election during your initial claim or anytime after that on Francis Online or by filling out and mailing a paper form. If you have worked for your employer for 90 days, your job will be protected while you are on leave. Your employer may also keep your health care benefits in place. Your employer must also keep your health care benefits in place. Your employer can require you to keep paying the same premium cost that you would normally pay. When you return to work, if you have worked for your employer for at least 90 consecutive days, you have the right to the same job and same job when you left. This means you do not lose your job title or role. You will also keep the pension you earned before you're going on leave. After submitting an application for benefits, claimants must notify the department within 10 calendar days, about any changes to the information on their application. A claim amendment can be submitted to make changes that do not require additional documentation, such as adding or changing employers, reducing leave amounts. Any additional application is needed for changes to a claim that require new verification documentation, such as changing the dates of medical leave for a scheduled surgery or extended leave beyond the date on the original documentation. Finally, a claim may be canceled at any time if the claimant requests cancellation, benefits have not been paid, and the claim was not disqualified by the department. So when a claim is canceled, the benefit year and the weekly benefit amount are also canceled. If you do not agree with the decision PayLeave makes regarding your claim, you have the right to appeal it by requesting a hearing to review the decision. You can request the hearing on most things related to your claim, including your weekly benefit amount, the length of leave paid leave approved, the dates of leave paid leave approved, and the pay leave denial of your claim. You can request an appeal 2 ways, logging into your Francis Online account, selecting your current claim, and file an appeal, mailing your hearing request to the employment department. If you experience discrimination or retaliation from your employer for taking paid leave, you may submit a complaint to the Bureau of Labor and Industries. For employees who work regularly in both Oregon and another state, we look at factors such as where is the base of operations, where is the work directed from, and where is the employee's residence, in this order to determine if they are eligible for paid leave Oregon. Some businesses will choose to purchase or create their own equivalent plan instead of participating in the state trust. Individuals working for an equivalent plan employer will still receive the same level or higher of benefits required by PayLeave Oregon. For more information on equivalent plans, please visit our website, payleave.oregon.gov. So I would like to introduce you to our new customer portal, Francis Online. Starting in September of last year, employers and third-party administrators started filing their combined payroll reporting using the new system, and in January, we released Francis Online in Spanish. In addition to increasing access for native Spanish speakers, we have seen employers take advantage of other self-service features that make doing business with us faster and easier. For example, employers no longer need to call or email us or submit a paper request form to do things like update their account information, submit documentation, or request a payment plan. Francis Online also has a built-in interactive assistant where customers can ask their questions in both English and Spanish and get help and decisions with each step, and directions with each step. They can also send a secure message through the portal to our support team with a question specific to their account. And beginning in August of this year, employees will use Francis Online to apply for PayLeave Oregon benefits. And starting in March of next year, people filing for unemployment benefits will use the system. To learn more about Francis, you can visit francisinfo.oregon.gov. So let's do a brief recap before we turn it over to you for your questions. Applications for pay leave benefits start August 14th. Benefits start September 3rd. 3 methods to apply is online, paper form, or phone. Benefit years are a rolling 52-week period that starts on the Sunday immediately before the start of leave. Leave can be taken in days and weeks and intermittent and consecutively. Your job and your healthcare are protected after 90 consecutive days of employment. And this concludes our presentation, and we would like to turn over for your questions.
Wow, I think it's a lot to unpack for
Yes.
people who are new. I would, Christina and some others have asked me personally, as an employer, so we're looking at this from the business owner point of view today because of the chamber membership and the businesses we work with. Does every business need to register for this program?
Only those, yes, only those, if you're a federal or a tribal government, no. But yes, you should register and you can do an equivalent plan or you can do the state trust.
Okay.
Yes, self-employed are optional. Like if you're self-employed, you can opt in.
So I think it was slide 13, 14 that talked about the size of the business by number of, would you mind reviewing those slides so that we can spend a little time to make sure people understand the size of your employer, your number of employees. There's a little difference between those. Can you review
Yes.
that, and we could take any questions in chat or live?
Yes,
Yeah.
so if,
Laura,
go
let me
ahead.
jump in real quick. As far as any employer that's in Oregon that is currently reporting wages for the purposes of unemployment insurance, they'll automatically be participating in paid leave. If you have employees whose wages are reported on a W-2, and unless they're work for the federal government or members of a tribal government or working for a tribal government, they would be participating in paid leave. So back in November, all employers in Oregon received the model notice for about paid leave and what their responsibilities and what the employees' responsibilities are within that. So at this point, we'll have received 2 quarters of wages that have been reported for paid leave contributions there. So it's not a specific thing where they have to opt in there, but they have to do the mandatory reporting for paid leave there. So Laura, my apologies. I just wanted to clarify that, and I'll let Laura get back on the employer sides.
Could you, since you mentioned that, I know we have some businesses that are one employee only, and that's themselves. They're an LLC paying themselves. Have you had that question, and are they're getting notices and they need to report for themselves?
So if they're an S corporation, then they would be participating there. So if they're a nonprofit, religious organizations, S corporations, they would be participating. As Laura was saying, if they're self-employed, then they'll have the option to opt into paid leave there. So they won't be participating. So again, members of tribal government or people that work for tribal nations, federal employees, and self-employed individuals would not automatically be participating. In those self-employed individuals, like a lot of your chamber membership, unless they're S corporations, they can opt in to the program. And there is a whole tab on our website. I did drop a link to our website, paidleave.oregon.gov, into the chat, and there's a whole section dedicated to self-employment, and there's a guidebook. So if self-employed individuals would like to opt in, all that info is right there.
That is self-employed would be a sole proprietor or doing business, your name, doing business as, you have the option to opt in, right?
Correct.
Yes.
Okay. All right, Laura, sorry.
So you wanted the the small or large employers, yes. So if you have more than 25 employees, you are required to contribute the 40% state rate of that 1%. And if you're a smaller employer, so if you're than 25 employees, you are not required to do the contribution, but you still have to do the 60%. You still have to report that 60% of that 1% for the employees that work for you.
So if fewer than 25, the employee can contribute or can opt to contribute 60%.
No, the employer is required to take 60% of that 1% from their wages.
From their wages.
Yes,
Okay.
are required to, yes. The employer doesn't have to, because it's less than 25 employees, the employer doesn't have to contribute the 40% of usually if you were a large employer. So if you do decide to do the 40% and you're a small employer, you do qualify for assistant grants. If one of your employees does do that, and when they apply and they're approved, you are able to use that assistant grants for that.
Okay. So some other questions have coming in. Regarding the requirement to continue benefit, are all benefits required to be continued, such as health, vision, etc.? If you require the employee to continue paying their premium and they fail to do that while on leave, does the employer still have to continue providing those benefits? Do you understand that?
Yes, yes. So yes, it is required for the employer and the employee to pay their premiums when they're on paid leave. Yes, during that time. If they fail to do that, I don't know, Philip, do you know if there's like a rule in place that says that they take anything out?
Yeah, so while employees are on paid leave, meaning that they had a qualifying event, they applied for paid leave, they were approved on paid leave, and they are out on paid leave, the employer is required by the statute that was passed by the legislature to keep their health benefits going. When the employee returns to work, for any portion of their premiums that the employer covered while they were out on paid leave, then the employee has to make the employer whole. So they've got to reimburse their employer for any premiums that were paid on their behalf while they were out on leave.
Okay, Alicia, did that answer your question? If yes, you could jump in, or if it was no, you can jump in or put a follow-up in the chat.
Yeah, so that pretty much answered it. Is currently, are there any requirements as far as how long you have to allow that, or any rules around it, or is that really just up to the employer?
As I understand it, I think it's up to the employer. So if it's, if somebody's out for 12 weeks and depending on what the premiums are, then, that's, as I understand it, it is one of those things that the employer and the employee can work out as far as in the making the employer whole.
Okay.
Yep.
Okay. Jessica's asking, if an employee earns more than $825 a week, how do they determine which method of payment is used? 65% of wage or $825 plus 50% of wage?
Yes, so it's calculated 65%, which is around $825, plus 50% of the person's average weekly wage that exceed the state average weekly wage, which is $1,269.69. So anything above that, then 50% of whatever that exceeds that amount, then yes, that's how it's determined. And we will have a benefits calculator August 14th.
Okay, so August 14th will be a benefits calculator on the site?
Yes, on the site to see how much you would be potentially approved for.
All right. Next question. How long does it take an employee to receive a decision once the application has been submitted?
I don't know if statute rule, it says 30 days, but I don't know, Philip, have you heard anything? We're still kind of like, it depends.
Well, okay, so as far as in the decisions, once the employee provides the verification information, we should have that claim processed within 2 weeks there. And once the determination would be made, they would be paid within that 2 weeks there. So it's, you know, but it is all up to the employee to decide if they want to pursue any type of paid time off that they might have with their employer, if they want to use unpaid leave under the Oregon Family Medical Leave Act, or if they were going to use paid leave under Paid Leave Oregon. So they would need to complete the application, provide the medical verification, and then we would go through the verification process, make the determination, notify the employee and the employer of the determination outcome, the lengths of leave. So how much time was the person approved for? When does those leaves start and end? And the type of leave. Is it consecutive leave? So if the person is approved for like a block of 3 weeks, 4 weeks, or were they approved for intermittent leave? So if somebody's needing to go to dialysis, chemotherapy, and they need to have 1 or 2 days off a week. So if they were approved for consecutive or intermittent leave, and the employer and the employee would receive both levels of that notification there.
Okay. Next question. I need clarification on the 60% of 1%. Is that for every employee or for only the employees who have opted in? And then a second question is, what if the employee doesn't come back after leave?
So yes, the 60% of that 1% is for every employee who works in Oregon. So it's that 1%, out of that 1%, 60% is for the employee, for the contributions, those employees who are working in Oregon.
And so essentially, anybody that receives a W-2, with the only exceptions of self-employed individuals, people who work for federal and tribal governments, if you are a working Oregonian and receive a W-2, you would be participating about paid leave. The only individuals can opt into paid leave is self-employed individuals. So if you receive a W-2, you would be participating in paid leave. And that's how the state legislature wrote the piece of legislation. And so to figure your contribution, is going to be $6 for every $1,000 of gross wages that an individual would earn. And the large employer, as Laura pointed out, it means they have more than 25 employees, and that includes full-time, part-time, seasonal, and temporary workers, both inside and outside of Oregon. If they have more than 25 employees, then they would also pay that 40% employer contribution, that 0.004 for every $1,000 of gross wages earned by that employee there.
And if the employee doesn't come back after leave, so if they decide to say, I don't want to work for you anymore, their benefits would end the day they give you that 2-week notice, or the day they tell you that they are no longer wanting to come back. So it ends that day. So whatever they give that 2-week notice, let's say I ask for 12 weeks and I'm like, I don't want to come back, and I'm on my 10th week, then I quit, or I tell you my 2-week notice to cover that 2 weeks, then I'm done at the 10-week mark, because I basically said I'm no longer coming back. I quit. They have to be employed in order to receive benefits. And did that answer that question?
Well, Christine, you could put it in the chat. I'd like to include Crystal's question here, who says, so employers have to cover what their employees don't pay for their portion of the premium? That's a question. If the employee's not paying, the employer has to make up the difference. Is that correct?
So is during that time frame when a person's out on approved leave, yes, the employer is required by statute to keep the employee's healthcare benefits going. And again, as we noted earlier, if the employee is paying a portion of the premium, then they're required when they return to work to make that employer whole on what the cost of their healthcare premium is. If that person doesn't return, I believe the employer can withhold the premiums that were covered for that employee while they were out on paid leave. I do want to note that if for any questions that Laura and I aren't necessarily able to provide an answer for you today, or if you have follow-up questions for us, please email us at paidleave@oregon.gov. I'll put that up on the screen. And one of our subject matter experts will follow up with you, and they can also reference the Oregon Administrative Rule in which our authority is on that. So you can email paidleave@oregon.gov.
Good. We'll repeat that a couple times too. So let's see. If the employee has accrued leave, sick or vacation, and they choose not to use their accrued leave, do they still qualify for PFMLA?
Go ahead.
Go ahead. I'm sorry, Laura.
I was going to say, yes, if they want to use their vacation and they do not want to apply for paid leave, it's okay for paid leave purposes, that's okay. If the qualifying event and they decide to do paid leave, they're like, yeah, I want to apply for paid leave, and it qualifies for OFLA and FEMLA under those, they have to run concurrent whenever possible. The only things we don't do is bereavement and military leave. But yes, if the employee decides to use up all their vacation, all their sick, and not apply for a paid leave, that is okay for our purposes. Yes, that's fine.
So just the point there is that it's concurrent. You can't tack them on to each other. It's still.
Yes, so whenever you have a qualifying event that falls under OFLA and FEMLA as well, you apply for paid leave, you have to run them concurrent. Yes.
The information we got last fall stated the employee had to opt in. None of our employees opted in. Now I'm hearing I was supposed to withhold anyway. Why was this not explained? Or is that correct? Can you answer that question, or if you had that question before?
Yeah, let me jump in on this one, Laura.
Okay.
Anybody that receives a W-2 in Oregon has always had there was never an opt-in option. They were mandatory participating in it. And I know from our presentation that we shared with you before, we've always said that this has been a part of our original script, that there is not an opt-in for individuals that are W-2 employees. The only individuals that can opt in to paid leave are individuals that are self-employed. So I'm sorry if there's any confusion on that, but it's always been that way, and we've always been saying that since we've been providing these presentations for well over a year. That anybody that receives a paycheck, they would be mandatorily participating in the paid leave program. The only other option there is if the employer wants to pay the employee's contribution as a benefit to the employee there. And, we are seeing a lot of employers that have chosen to do that because they want to, attract and maintain their talent, and they're providing the paid leave benefit for that contribution for their employees as a benefit to them.
So have you had the question for people who misunderstood and have not been deducting? Should they call the number or email paidleave@oregon.gov to figure out what they could do to make amends or to catch up?
What they'll need to do is actually talk with the Employment Department Contributions and Recovery Unit to get caught up on that. And if they've been not withholding. So here we are 8 months into the year, so they've got 2 quarters of reporting to get caught up on.
And that is a different number to call, or
Yes, it's 503-947-1488, and that's for the employment departments, and they would need to speak with contributions and recovery.
I think it's option 3.
Yeah,
Yes.
I think you're right.
maybe
Yes, and
we
I
can put that in the chat
Yeah.
also. I'd like to have that in my notes just in case. There have been a number of questions here of what if they take the benefits, get paid for them, and don't come back until the time is up? Does that mean the employer is out whatever money they contributed? There's
Philip?
no compensation from the state for what they may have lost if the employee doesn't come back until the time.
Yeah, and one thing we should clarify, the only difference between paid leave Oregon and the current existing law that's on the books, the Oregon Family Medical Leave Act, is that paid leave is paid time off, and Oregon Family Medical Leave Act is unpaid time off. So individuals, have the same rights for paid or for time off, for family emergencies, serious illnesses, serious accidents. So that we've had these type of rules in place for years, but the paid component is definitely a little bit different. So what if they get the benefits and get paid, and then they don't come back and they don't tell us until the time is up? We would need to get some further clarification. Is if the employer is providing for the healthcare benefits or any other type of expenses that the employer was covering while the person is out on leave, can the employer withhold that in a final paycheck? And I believe that the employers can, but I would recommend emailing us paidleave@oregon.gov and let's get one of our subject matter experts to respond directly to that employer.
Great. I think that Crystal's question was along with that. The employee technically owes the employer money. You recommend that they email paidleave@oregon.gov to get subject matter expert on those questions.
Yeah, I think that's the safest answer. Honestly, I don't think I've been asked this question in this type of forum. I just know that when it comes to healthcare benefits for employees that are out on leave, that when they return to work, that they're supposed to make the employer whole, reimburse their employer for any expenses related to their premiums that the employer covered for the employee while the employee was out on paid leave.
Okay. Are employees required to notify the employer both verbally and in writing? What happens if employees don't notify within the 24 hours for verbal or 3 days for written notification? Jessica, is that to go on the leave program or when they're, did you, Laura and Philip, understand that question?
Yes. So yes, they are required to, if it's unforeseeable leave, like, you got a car accident or something happened where you had to take leave right away for an emergency or something unforeseeable happens, you have to verbally let your employer know within 24 hours and then written notice within 3 days. Yes. And there will be a questionnaire when they apply for leave that will be sent out to the employer, also to verify that they actually work for the employer. So the employer would get a notification saying, "Hey, this employee, did they notify you within the time frame that they asked for that leave?" And you say yes or no. And that's how it would be approved, I guess, that yes, they did.
Right. And for foreseeable leave, somebody knows that they've got an upcoming surgery, they're expecting a child, then they're required to give the employer 30 days notice. So 30 days notice for foreseeable leave. 24 hours verbal notice for unforeseeable leave, followed by written notice for 3 days. Now, there is, on the cases of unforeseeable leave, there is a good cause exception. So if the person's incapacitated, they don't have a representative, there is a good cause for those cases of unforeseeable leave, and they're not able to provide the employer appropriate timely notice.
Mhm. But if the employee decides like, I don't want to tell them, I'm like, yeah, no, that's not going to work.
Yeah, that won't work. In fact, I believe Laura noted it earlier. In the cases somebody doesn't provide the employer timely notice, then their first week of benefits is going to be reduced by 25%.
Yes.
Okay, that exhausts the chat questions. I do want to, it's right on the screen here, paidleave.oregon.gov is the website. Email is paidleave@oregon.gov, and the phone number 833-854-0166. For those who had questions about catching up, if you have not been withholding or contributing, that is phone number 503-947-1488, option 3. And there you go. It's right there in the chat. I do want to, again, thank you, Laura and Philip. Josie, would you like to make some final comments before we close out the webinar?
Yeah, thank you, everyone. This was great. I hope you enjoyed the information, and we will be sending out the recording, all of the slides, and the contact information, especially those that weren't able to join us. So thank you very much.
Yeah, and Josie and Ruth, thank you so much for hosting us today, and thank you to your members for allowing us to present today. I do want to point out that Laura and I and our team, we do provide this type of forum on a weekly basis. We call those community conversations, and we're going through our Benefits Explained series right now. All that information can be found on our website. You would need to register for it, and it's through Zoom, and it's a weekly format. We will be doing our next Benefits Explained community conversation tomorrow morning at 7 a.m. if you'd like to join us. And then typically they're at Thursday afternoon at 3 p.m., but tomorrow will be at 7 a.m.
Yes, thank you.
That's good to know. So do those benefits explained conversations include time for questions, or is it more presentation?
It's a 15-20 minute presentation followed by 40 minutes for questions and answer.
Okay, so tomorrow morning at 7, but in the future it'll be Thursdays at 3 o'clock.
3 o'clock,
right?
Yes, we try to move it so everybody can have a chance to participate if they want to do it in the morning or the afternoon. They're not available.
Okay, and then there's a request to repeat the phone number for calling in to catch up on this program, and that number was 503-947-1488, option 3. And I'm also assuming if they call or contact paid leave at oregon.gov, they can also direct them to the right department.
They will do the very best. So we're two sides of one house. So as far as in revenue coming in, and that's contributions and recovery, as far as in paid leave and the administration of that program, that's under the 833-854-0166 number.
Wonderful. Thank you so much. Been very educational. Appreciate everyone who signed in today.
Thank you. Have a wonderful